I'm amazed how many people own stocks.
Welcome to the Playing Footsie podcast. My name's Paul, and each episode, me and the lads get together to talk about the stocks, stock market news, and finance in general. Quick disclaimer, you shouldn't consider anything in this podcast as personal financial advice. If you need such advice, go to a financial advisor. And please remember, when investing in any form, your capital is at risk. So sit back, relax, and let the lads fill you in with all the stock market news of the week.
The sucker's going up.
Right, what a day. Let me have a look at my portfolio. Sorry, I've only just got back from work, so I'm just kind of looking through. And what have we got? We've got some big moves in the Nasdaq. That shouldn't surprise anyone. At the moment, I'm looking at Tesla up 18%, just down from 19% a minute ago. Amazon up 4%. Palantir 7.5%. GameStop up 25%. AMD up 6%. I think everything's just starting to tail off at the end of the day. Are people taking profit? It looks like it, because I think these stocks have been up a lot higher today. AMD 6%, Alphabet 1%, Alibaba up 5%. Nice. I did want Alibaba to do pretty well. So,
you know what?
Bit of a strong day today for the Nasdaq. A bit of a rebound. What do we reckon? Is this gonna stay? Is this Nasdaq rebound here to stay, or is it just a bit of a dead cat bounce? What do you reckon?
It's Tuesday, right? It's just a normal Tuesday.
It is Tuesday, Zach.
I mean, it's a normal Tuesday on stock tweets, right? They have this theory where on Friday everyone sells, and then on Tuesday we go up.
Yeah, it's the Friday sell-off on the Tuesday, right? That's what we're having. But everyone's buying. Everyone's buying back into tech stocks.
Yeah.
Value, I will say, value stocks haven't really gone anywhere, so that's all right. What are we seeing? Someone come up with something. What are we seeing here? Are we seeing tech just bounce back massively or not?
Oh, it's all going to be all right, Paul. It's David Tepper said so at the end of last week. The chaos that was coming from the 10-year bond moving very slightly to 1.5 and causing everyone who'd probably paid too much for stocks to start thinking, whoops. That's apparently going to be okay until at least September, anyway. Because David Tepper said two things. One is that the 10-year bond being at 1.5% means that it will be attractive to, I think, Japanese investors is where he was looking particularly, which means it will probably hold there for a little while without kind of running away further and further up. And the other thing is that the Fed will do nothing, at least until September anyway. So, ask me again in September, and then I'll tell you something else. But also,
right, two questions. Who's David Tepper? Tell me who David Tepper is.
Steve Lee will tell you that.
David Tepper is he's the head of. I don't know if he still actually runs the fund at Appaloosa Management. I think it's quite. It's almost shuttered now, isn't it? I think he's only got a few clients left in it. But basically, he is a man who's quite famed for when he talks, the market seems to listen. And yesterday he came out and said that it's a great time to be in stocks. He's very bullish stocks. He still thinks they're all pretty cheap, and the market's responded today. But one of the things I was just going to say, I think it's rather weird that there's this thing where people either buy bonds or they buy super overvalued tech stocks, and I don't really see like where's the in between. Like who's going? Oh, I've completely overshot it here, buying all of these stocks at massive valuations. I better go get my 1.5% bonds.
Yeah, it's so extreme, and I've seen this a lot actually in some of the comments on my YouTube channel. It's so extreme. It's either quickly buy fucking bonds or quickly get back into. I mean, AMD was the latest one I did a video on, and everyone is like, "Oh, we need to not be in. We need to be cash right now, or we need to be all in AMD." And sorry, I got work on mine. We need to be all in AMD and just like buy. Why not just buy a little bit of AT&T, guys? just sit there and chill out, get you 7%.
But there's no urgency on AT&T. AT&T is going to be there for ages when we want it. We'll get round to that eventually, and it'll still be at around $29.50.
Yeah, there's a lot of people that said that, haven't they? They said that basically, it will still be it will still be just under $30 in about 2 years. So there's no point in going on that. I can always come back to that whenever AT&T might recover. But yeah, you're right. It's is it more of the fear of because I haven't checked gold. Did gold go up? Does anyone know?
Hasn't gold gone down quite a bit? I think was it the iShares spot price I was looking at? I think it was back on to previous March 2020 prices.
You know what did go up though, and I know we're bringing it up again. Bitcoin went up. It totally disconnected from the Nasdaq, which was very surprising to me. I mean, even me, who is very pro Bitcoin, very pro Ethereum, disconnected from the Nasdaq, and I didn't think that would happen. I really didn't. So that's just something that I wanted to note there. It went up about
55, was it?
I want to say 18%. Let me have a quick look.
I think it was up to 55.
It went up about
8k USD.
Yeah, 8-9%. It's pushing 1 trillion again. Or it's probably gone over 1 trillion again. Looking pretty bullish, but that was all week. All week it was going to that. It was like people flowed out of the tech stocks and into Bitcoin or into Ethereum or into Cardano, and it was just interesting to see for me. It was just that's just a side point because I'm quite into Bitcoin myself. But yeah,
that would make good sense though, right? I mean, that would make good sense. There's been a good amount of retail money in kind of big cap tech that lately, or tech in general, that's been kind of chasing fast returns from retail money. It seems like a natural place to look if you're on the retail side and you're after something that's going to move soon. Might be Bitcoin, right?
Well, I'd say especially if you're a tech investor and you believe in the future and you believe in innovation and all that, then you must think that Bitcoin is your hedge against tech stocks. So if tech stocks start going down, then surely your hedge against those tech stocks going down would be to move everything into the next digital gold. That it's an interesting theory. I mean, I've not got anything to really back that up other than what happened last week. By the way, last week we noticed some of the big tech stocks went down well over 30%. The FANG stocks stayed all right, didn't they? They only went down about 8 or 9%, something like that, which is a bit annoying because I think I bought into Amazon probably at its absolute peak. Although that still seems to be within its flat radius as far as what I've seen. But
Amazon's been doing fine for me. I just keep losing on FX basically, so it doesn't seem to matter what price I buy it at. To be honest, it's higher than it was when I bought it. I'm still in the red. I'll go a bit more in the red if the price actually goes down, but
Well, we actually had a good week on FX, didn't we? The stimulus seemed to push against the GBP, so British pound seemed to have a good FX change this week. Probably not good enough to make any actual deal, but
I thought I was looking earlier today, and I thought that was starting to put itself back again before the US Open today. Anyway,
it makes no sense that you're pumping nearly 5 trillion into the economy in the next couple of months, and that the dollar would strengthen. It makes no sense.
Yeah. So, well, this is it. So, if the dollar's going to weaken, Janet Yellen, I think I saw an interview or saw a speech of hers the other day, or it might have been today actually. Jeez, sorry, my head is blagged at the minute. Today, Janet Yellen said, "There's no inflation. We don't know what you're talking about. It's not coming. We're not going to change anything to do with the rates. Surely, if you're pumping 1.9 trillion into the economy again, there's got to be inflation going on, right? Are we seeing that? Is that anywhere?"
No, she thinks she's right. I think she was. She also hates Bitcoin. Whilst we're on this, so there's a lot of things that she doesn't like in general.
Well, yeah. To bring you some quotes on Janet Yellen, she actually said last year or 2006 and last year and 2016, she said there will never be another large crisis within our lifetime that will affect the markets. And she was totally wrong because COVID hit early last year.
Not sure I'm going to blame her for that, though.
Yeah.
no, I'm not going to blame her for that one either.
I'm not saying that. I'm saying she's just very ill prepared for these events and very willing to just come out and say whatever she thinks. So her coming out today and saying, "What? No inflation?" We're seeing it, right? We're seeing it in stocks. We're seeing asset inflation. Are we seeing housing inflation? Surely, at the bottom line, at food and cars and all those sorts of things, we're going to see massive inflation there, right?
See, inflation is kind of like a silent beast. You don't normally really see it until it's recorded. So it's not something you can technically feel while it's happening. It's normally towards the end of the year when they say, "Oh, do you realise that, the price of X has gone up by Y?" So yeah, Yellen's and she was under Obama as well. She was a cheerleader for the economy, and she would say what it takes to keep the markets calm, and I think that's basically what she's trying to do now. I think with the markets, well, with the US opening back up, the vaccines being rolled out at record speeds, stimulus in the pockets of American citizens, and it's a lot of money being I think it's $1,400, and then it's extra if they've got dependents too. So there is a lot of money hitting American pockets at the moment. So it still feels like a good time to be in stocks. I think you can forget your 1.5% on your bonds. I'd be seriously looking at stocks at the moment.
Certain kind of stock, right?
I'd be hard pressed to look at the opening up stocks at the moment because they've spent so long closed, they've taken on that much debt, they've issued, diluted. A lot of people are looking at these stocks and saying, "Hey, this used to be a $60 stock, now it's a $30 stock. Look at it, still got 100% to go," and they're forgetting that it's probably got 3 times as many shares in and twice as much debt.
I read.
Have you looked at anything this week with Tesla down 30%, Teladoc, which is one of my favourites, came down about 11%. Is there anything in those that you thought might be quite interesting?
I bought a little bit of Adobe. That was one of the ones that interested me quite a bit. I picked it up at just over $420. So it's not a great price, but the idea was that it would be a lean-in position that would that I could build out over time. Today, first day of owning, it shot up nearly I think 10 or 12%. So it's starting to get back out of the sort of range of where I'm interested in holding it, where I'm interested in buying it, certainly. But yeah, there are a few stocks out there. I was interested in Teladoc. I averaged down on Teladoc. Today it's gone back into the green, so that was a nice purchase for me. And the other one I picked up was Blackline, which is they're an accounting automation company, and they're working with pretty much all of the biggest companies in America. When you're looking at your really odd stats that we like to look at, like ARPU, the likelihood is that Blackline has produced all of this automatically for the companies. So yeah, it's a nice looking company trading at about 10x sales, which would probably make 2 people in here sick. But yeah, it's still a small company at just over $5 billion in the schemes of the American economy and the American financial system. So yeah, I think there's plenty of room to grow there, but it's one of those ones where you've got to track it and make sure it's getting better value every time you buy it.
I do really like Adobe. Adobe's like that's a shit hot stock. It's such a good company. Everything it does now with the Adobe CC is pretty seamless. Subscription based recurring revenue model.
Rundle.
It's got everything, every single buzzword, ARPU, Rundle, all of the buzzwords of 2021 that's coming.
Paul, what software do you use to video edit?
I use a very old version of Adobe CS.
Oh, that's it. Long Adobe then.
That is or isn't free.
Oh, you found it?
Yeah. I just found it on some website.
I found it on the internet.
Well, to be fair, I mean, you're a user of Adobe software, so it's only best coming from yourself. What kind of...
No, I love it. As an Adobe user who's never paid for an Adobe product, I think it's brilliant. But I think Adobe is so expensive. Even though, when I was a wedding photographer, I still didn't pay for it then because I just thought it was way too expensive. And obviously the ways I got it were completely legal.
Borrowed it.
Yeah, like lent from a friend.
So Adobe, hit us up if you fancy sponsoring the podcast.
Their model now, because obviously now if I wanted to upgrade my Adobe suite, I'd probably have to. I would be paying for it. I wouldn't be using my old CS5, CS6, and stuff like that. I still think those are just as good, which is why I'm not upgrading. But yeah, there's a lot of new features on there which could make my life easier. Maybe if I just paid a lot more for them. But that's what it's all about, isn't it? It's about rundles. It's about ARPU. And Adobe, even CNBC wanted to include them in as a new FANG stock because I think it's probably like 8th or 9th biggest holding in the S&P 500 right now. So they wanted to make FANG into FAAANG, and they wanted to add Broadcom and Adobe to it. So that's something that that's an article that always got me about it, and it's one of the reasons why I started investing in Broadcom on this dip. I think I averaged in 2 or 3 times, and I think it's in the positive now. So I'm quite happy with Broadcom. There's a lot to it. There's a lot to Broadcom, a lot of cash. I just thought it was a nice time to get in on that one. I think Steve W is itching to tell me about something that he's
Just
seen.
on the Fangs thing for a moment. I mean, am I the only one who thought surely the next Fang edition was Microsoft?
Well, actually, Microsoft is in FANG. They actually call it FANG M, but the M seems to be silent.
Well, they often exclude Microsoft because they say it's not tech, don't they? That's one of the things they say. Although it's about as tech
Everything's
as you can
tech these days, isn't it?
Yeah, well, they've even tried to make themselves more tech with like Xbox.
Ricardo's bloody tech.
To be fair, right, I got into a little Facebook fight the other day on someone. I hope they never see this, but
Was it?
I was trying to say that NHS workers weren't getting paid and blah blah blah. I don't feel too much about the NHS workers, the 1% thing. I don't get too political with that, but I was trying to say that actually in relation to tech, NHS workers are actually far behind, even though they've got a much bigger client base in the UK. And I was just trying to argue this kind of broadly, and then I noticed that Deliveroo drivers were getting a £10,000 bonus this year, along with pay rises. So I was starting to try and justify Deliveroo drivers as tech workers.
You're technically Deliveroo, really, aren't you? But you're just delivering people to the hospital.
We deliver.
Oh dear.
I mean, I wonder what bike they're gonna upgrade to, right? With that 10,000 boost.
Yeah, man. There's going to be some seriously good Deliveroo drivers.
Did they? Because I also think they got given shares as well, didn't they? Prior to the IPO.
Yeah, you could also as customers as well. You could buy them through the app, couldn't you? If you
Yep.
If you, I don't know if that's today actually, or tomorrow, but if you log in onto the app, you can claim some shares, but you have to pay for them obviously. But you also you go into almost like a raffle.
Get a free fractional share with your Big Mac or something like that.
I think it's for customers.
In fact, no. It'll be like that thing on the, when McDonald's do the Monopoly thing. You get your Big Mac and then you peel off and you go, oh, 1 free share of Deliveroo? That's going to go up 10% in a day, isn't it?
Or 100% on IPO.
Did we get any idea of what Deliveroo is pricing at? I haven't seen any information about them really whatsoever.
Overpriced as every other IPO.
Yeah, it was Roblox tomorrow as well. So
I was going to mention Roblox today because Roblox is actually one game that I don't really know a lot about. Do you guys know anything more about it? Because it's popular, right? It's popular with the little kiddies, right?
It's got the same kind of...
Zach's our expert on them.
Yes. All I know about Roblox is basically MMO, and every kid around 10 to probably just over Steve's age plays it. Including, and I do know. I think I do know Steve plays it as well. But I think more importantly, there's a lot of subsidiary kind of companies, including Paysafe, that are going to benefit from this. I think a lot of people are just focusing on Roblox, but Paysafe, they do all the transactions and all the back-end stuff for all the microtransactions in the game. So, yeah, it's going to be big for some companies, but yeah, for Roblox, it's a big thing. I mean, it's basically, what's the other game called? The Fortnite type hype. So, yeah, they're not small, and obviously if it's going IPO, then it must be something a lot.
So they hope to be making a lot of money off 10-year-olds nicking their parents' credit cards.
Pretty much, yeah.
I was watching I was listening to the Motley Fool podcast, and Brian Feroldi, who's one of the head writers on there, he had his, I think it was his son on, and to talk to everybody about Roblox, and he's only like 8 or 6 or something like that, and basically that was me and Steve have discussed before about buying a stock or a set of stocks for our nephews or our godsons when they grow up, and I bought Disney for my nephew, but for Aldi, he's buying Roblox for his son, and he's that confident, and he is a good investor. So yeah, maybe something in it. I noticed when I looked through it that they were kind of like taking the approach to privacy and security that everybody wanted Facebook to do. They mentioned privacy, security, moderation in their S1 like 200 or 300 times, which, Facebook probably was probably only ever mentioned it once. So
yeah, I did see that. That was quite a good thing actually, because other companies like Facebook are, and this is the problem with Facebook, is it's of the damage it might be having on our younger generations. Everybody's probably seen that graph where it has the inception of Facebook, then 10 years later the 14-year-old girl suicide rate starts to just go up, and it's all based around the introduction of social media. But Roblox was very, very, like you say, it was very, very focused on security, and in the article, it actually does mention security to children hundreds of times, and that's what they're going for. They're going for that really important part, and I think that's quite good. And it'll also stop the kiddies from, like I said, paying for stuff on their parents' credit cards. I just want to touch on this one because I thought
that's going to keep happening. I mean,
surely they want that.
Yeah, they're not going to stop people from doing that, because I know a lot of people I know have bought so much Fortnite hats and all sorts, and their parents have asked me, okay, can you speak to so and so, and I'm like, okay, but it's a bit weird because you can't do it because they're almost incentivized to keep buying. It's almost like
Well, I'll tell you what, Zach, I wanted to touch on this, and sorry to throw this into you lads, especially Steve D and Steve W, because I've got a feeling you're not going to be into this one too much. But NFTs, non-fungible tokens, have been making a big stir today, on Tuesday, because I think last week Nyan Cat went for $900,000. It was something like 300 ether at the time. I know those two don't match up, but I'm just trying to do this off the top of my head. But today it's Jack Dorsey. Jack Dorsey is selling the first ever tweet as a non-fungible token, as an NFT. In case you didn't know, NFTs are non-copyable crypto objects. They can't be reproduced by anybody, and if you buy it, then you are the owner of it by cryptography. Basically, no one can take it from you unless you make a deal with somebody else for them to take it off you. And so the very first bit of code, or this layer of code that's being created for the first ever tweet, it's Jack Dorsey saying something like, just making my first Twitter account or making my first tweet. That is being creative, and it's going for 2.5 million. Currently, the auction is.
Did they offer fractions in that, Paul? Or
no, I don't think they did. I think it's
bugger.
it's
I was thinking that was
one buy.
I mean, it's my godson's birthday on Friday. I was thinking that might be him sorted, but never mind. I'll get a fraction in GM instead.
No. It's one big CEO who's buying it. I can't remember the guy's name. That did come up today. But I don't... With non-fungible tokens, I find it really stupid when you make art out of them. So these arts, things that Logan Paul's doing, and Yankat... is really stupid as well, because it's just on your computer or in your area where you decide to store it, but everyone else can use it. I know that's the same as copying a piece of art, but everyone can just use it willy-nilly in exactly the same way. However, in games, and I know this is a long-winded way of getting to this point, but in games, I think that's where non-fungible tokens could really take off. So let's say Warcraft. I haven't really played Warcraft before, but I understand it's a big MMO, and you could have weapons or items in that which only exist to you. Now they could cost a lot more, and they could generate a lot more revenue in these games. And I think NFTs are going to come to games a lot quicker than we think. Zach's probably the one to talk about with me on that one. What do you think?
mean, we've had this kind of concept for a long while. I mean, Valve's been making skins for guns in CSGO for a long time, and I think there has been limited supply of skins. I mean, that's how they keep the prices up. But because you've got one of non-fungible tokens, I guess it's almost a sneaky way of upping the price and trying to magnify, the exclusivity and attached around one set of, digital art piece. And I'm just thinking now, because it's going to expand the entire art industry now, isn't it? All those graphics designers and animators, and I think there's I
suppose so. I suppose it's a good let's say if you were a surface patterner, and you were a surface patterner is somebody who designs the patterns on your duvet or something. Those repeatable patterns. If you were one of those, then I suppose you could sell. You would own clearly the copyright of that pattern, wouldn't you? So actually, you might have a good point. It's good for copywriting, I suppose, these NFTs. But I still really don't get them for art, because the art of the Yankat, the creation of that is already out there. You can't recreate it into a blockchain. It seems like you're not gaining the copyright from that, because somebody already has the copyright out there, whoever made it. However, in a game, I think in games, NFTs are going to be very important, especially as we evolve into augmented reality and virtual reality. I can really see this being a real thing. Sorry, we've gone onto a tangent there. It was just something that I brought up. But let's get back to the market and the crazy time that we've been having today. And someone who's been really happy with the market must be Cathie Wood, right? Cathie Wood has to be happy. Everything's coming back. I don't know how much your ARK. I'm just going to very quickly check the ARK K, how much it's gained today. It looks like ARK K is down still. Like 30% down from 159 down to 110, and it's gained probably 10% of that today. So Cathie Wood must be hopeful that things are returning back to normal. But she must have been filling her trousers over the past week, right?
No, I don't think she's been filling her trousers over the past week. I mean, I think she knows that ARK has been obviously front and centre of a lot of people's thinking, and in particular a lot of kind of new market entrants thinking, but I don't think that's how Cathie thinks, and I don't think that's how ARK thinks. I know their job is to sell ETFs first and foremost, right? But I do think they're kind of ingenuous when they talk about thinking long term on Tesla, thinking of it as a car company, thinking about what's going to happen in the distant future. Ignore the short term noise for the moment, and yeah, they'll know they've had a big run up with some money that's probably not going to stay there for very long. So they'll expect their kind of flows to go up and down and that sort of thing. On their website, they do say ARK is supposed to, or at least designed to, underperform in periods where there's big drops in the market and outperform when it goes up, basically. So I get the impression she won't have been panicking too much. I mean, plenty of people who own ARK may well have decided, sod this for a game of sticks, and wandered off somewhere else, but that's the nature of people with short-term interest on things, I think.
She was on CNBC, I think it was over the weekend, and she basically was talking about that she's not worried about the pullback in tech because it's not a sign that we're going into a bear market. It's actually a sign that we're broadening out into a full bull market. So rather than sort of the concentrated tech stocks going up and going up massively, Cathie's argument is that some of that froth is coming off the top of the tech stocks and being spread more widely across the market. And her opinion and the opinion of her analysts is that essentially what we're going to end up with is a continuation of the bull market, but across the whole market rather than in sectors themselves.
Yeah, that's code for stocks only go up, right?
Yeah, pretty much.
Yeah.
I take back the bit I said about them being ingenuous when she says stuff like that. That makes it hard for me, to be honest. I think probably what she's thinking is, there's going to be some noise in the sort of short to medium term. I think long term she does believe in the stuff that she has. But yeah, I mean, I suppose if I had a job selling ETFs to people, I would also tell them they were going to go up in the sort of near term as well.
The thing is, I think there's sort of two types of people who go on to CNBC and talk about stocks. There's the people who just go on there to say, everything's all right, I think we're still in a bull market and we're going to go up. And then there's the people like Bill Ackman who go on there and have a little cry.
Why has Bill Ackman said something?
No, he was just. I'm just thinking back to the Herbalife situation when he was.
He made a mess. He was a bit of an asshole on there. I mean, let's talk about someone who has been crying very quickly. My favourite man, Chamath Palihype-itiyas. Paper hands Palihype-itiyas.
Help me out here, Paul. What's he been crying about?
He sold Virgin Galactic out of his personal
entirely,
account.
or
people are saying that it
was it?
Hey? Yeah, entirely, mate. It was a couple of 100 million, probably 700 million or something like that. But he's basically lost the confidence of everyone now. Virgin Galactic is his baby, his original baby. It's what made him famous, basically. And he sold out of his personal stash of it. He has still got a couple of billion maybe in people are saying it's with his friend Ian Osborne, or I think his personal friend was, but I think it's basically kept within the Social Capital company. And Social Capital is Chamath Palihype-itiyas' big company, which he sees as the next Berkshire Hathaway. He wants to consider himself as the next Warren Buffett. He believes that everything in his portfolio is within value and an extremely good investment for the future. And to be fair, probably quite a lot of it is. There's a few really good companies in there, but he's a SPAC man. Everyone was rallying behind him, and now he's gone and he's sold out, basically. I mean, what do we think of Chamath, man? I think he's
tweeted today, just to add to that theory. I guess I got my swagger back. Truth. Too soon?
Too soon.
So now I'm hoping the market just goes to shit.
Yeah. There's some people. I mean, I don't wish anyone to lose any money, and a lot of people have been saying to me, like, "Why are you so bearish on Tesla?" It's like, no, I think Tesla's an excellent company. I think it's amazing. I just think it's a bit overvalued, and I would like to see the people that are pushing people into a risky valuation. I would like to see those people who have been doing that lose a bit of money, but not the people. But unfortunately, that's going to hurt a lot of people at the top who they have been coaching.
I'd like the people who are pushing people into Tesla at whatever the valuation is today to actually buy some Tesla themselves.
Exactly, and they're not. I don't even think many of them bought the dip, as it were. So I don't know. I'm not convinced by these people. Cathie would. I know she did start buying some Tesla at the top of the dip. You know, when it went down like 5-6%, but at 30% down, she weren't buying no Tesla, and it was a bit annoying because I look at the ARC deals every single day, and yesterday there was no Tesla in it, and I don't think the day before there was either, and that's just a slithery sign to me. I don't like it. I really don't.
So, I mean, I understand that this is my failing and not ARC's on this occasion, but I really struggle with the idea of ARC buying Tesla. I mean, they sold like quite a lot of it not so long ago after it had a big run up. This is like pre-split. They sold it at sort of 900 or so pre-split, about 800, I think. So now it sort of feels like that's not so long ago in the course of a kind of an investing life, and now buying it back again when it's about 400 times higher than that or something like that seems to me really kind of weird for a company. I get that you shouldn't get stuck on prices and that things change and the kind of macro environment has changed and all that sort of stuff, but I do kind of think, wouldn't you have been better just not selling it before when you had your $4,000 price target on it?
I know you don't like the way that ARK Invest makes its buys and sells, but I think from one position, ARK Invest is very strict on how much it allocates to its ETFs. I think most ETFs are, to be honest with you. And because Tesla is always over 10% and under 10%, they are always buying and selling it. I get that.
I follow on from that, actually, because I watched Cathie Wood's not an interview, sorry. One of those YouTube lectures she does, and she did say...
Yeah, she does the update every month.
Yeah, she did say they trade every day for that purpose as well, just to find any quick trades as well, because they're scalping, and she admits to that as well. And I think what Steve's on about there, I think that's what she's doing. She's scalping at this level.
I agree with that, and I understand that. I do it myself as well a little bit, but I mean, in the sense that if I own something and it drops 5%, I might buy more of it, bring my average down a bit, and then shift it out a bit if it moves up again to get my position straight a bit. I mean, that's probably slightly more short term than I want to be, but I have my failings and get drawn into these sorts of things. But I mean, if you're someone like ARK, I mean, why would you have a kind of self-imposed rule like that? She's not anywhere near owning too much of the company or anything like that, is she? I mean, it's not like a kind of Berkshire style, I'm about to run over 10% of Bank of America because they've bought a load of shares back and now I own too many of them or something. This is just, we've decided we don't want it going above 10% or something, right?
Yeah, she certainly doesn't own 200 odd billion of Tesla, so she's nowhere near that. And you're right, the game is, this is a stock that may or may not be overvalued at its present point. But everyone's argument with something like Tesla, and I know we're getting into Tesla too much here, but the belief is that in 10 years it could be closer to 4 trillion. So why not just hold on to it? You're not allocating any more capital to it.
Well, she said that she's about to come up with a new price target, so I assume now they're all currently sat back in the office, closing their eyes and smashing the calculator and seeing which number comes out the biggest.
Doesn't she get her numbers from Paric? I mean, that's what
That'll be it. Tesla, current share price, plus $1,400 stimulus, new share price.
I wonder what...
you've just written Parrot Patel's joke. If that comes out, we know you're Parrot Patel, alright?
I was going to say, what's Paric's view of Chamath selling out his space?
He's actually really
He's
supportive.
really friendly.
I
Yeah.
saw some.
He is, and I think
I saw some.
He's a bit of an he's a bit.
Chamath calls him Dad.
But I don't know where Parrot Patel leans on actually in the market. I don't know if he's just an all-out hating on everything or just telling the good joke at the right time, or if he's actually got a leaning towards... I thought he was quite value investing leaning, but it might be that he's totally the opposite.
I think you probably got there by elimination, right? In that he keeps abusing everything that isn't value, and therefore you think, well, he's got to be in something, so maybe he's in Unilever or something.
That could be it.
Yeah, he's all in Unilever.
Can I read you another Chamath quote?
Yep.
Go.
In moments of uncertainty, when courage and strength are required, you find out who the true corporatist scumbags are.
I did.
Him.
Him. Literally him. Like, please don't tell me that's a quote over the past.
He
It
must
was-
have had his
it-
webcam on when he was typing that one out.
It was actually. It's a recent quote. This actually.
Is
He's
it? Oh
he's
man.
almost hypocritical. I don't understand. I don't think
Yeah.
he knows what he's writing.
By the way, my favourite one at the moment was. I probably shared it with you guys already, but I'm going to share it to everybody else. It was something like the S&P 500 is up 2.6%. I'm up 3.2%. Therefore, I'm up 56% on the S&P 500. And I'm sitting there going, well, my returns ain't that good. So but that still makes me 150% up on the S&P. I'm going, okay, what a sack of shit.
Wow.
What are you saying, mate? Oh, yeah,
Save-
well, we could go to town on Chamath all day, I think.
I'm glad he's in the market for this sort of stuff. It's just it makes it more entertaining, as you know, even on days like this when the entire market's gone red, and you get these kind of like little clowns, I guess. But yeah,
I wouldn't miss him. I'll be
No.
honest with you. If he wasn't in the market, I wouldn't miss him. But
no. I'd miss Park though.
I would miss Parrot.
Chamath in 10 years is going to be writing letters, yearly letters. He's going to be holding investor days, and there won't be a Warren Buffett in sight, but he's going to quote Warren Buffett every single time, I reckon. It's going to happen. I'm telling you, Social Capital is going to IPO soon, or it'll go SPAC.
I'll go back with Barstool.
Merge with itself somehow.
All right. So yeah, we've had a good day. Tech stocks have had a good day in the markets. I hope everything's coming back. Zach, you must have had a pretty good day on today, right? Or is SPACs the other part of the markets being left behind?
SPACs have just gone back down to the NAV, haven't they, Steve D? I think one of the SPACs that we were looking at, Alto, it hasn't merged as of yet. I don't know what they're planning as of yet still. But I have seen a lot of SPACs go down to about 10ish, 11ish, and at this level, it's just a case where people just say, "Oh, what's the worst that can happen? What's the downside?" And then everyone just starts piling in, and then they go back up again, and then we wait for the next recession.
The thing is about the NAV is that everybody says the NAV is $10, and unfortunately that was only in a bull market, because a lot of people would quite happily lose $1 a SPAC to get their money back and go into something else. So the new NAV was really $9. So it was an odd period really, but there, like we've said all along, there is some really good SPACs and there's some absolutely terrible ones, and everything got lumped into one. So all of the SPACs that you would look at and think, they look like pretty decent companies. I'm talking like Proterra, Barkbox. They look like pretty decent companies. They've got good revenue. Some of them, I think both of them are 200-300 million revenue already. So they're not small companies in the grand scheme of things, but they went all the way back down to $10, and I think to just over $11, which is not the worst valuation for something like that.
Proterra at $10.
It was that, I think it went down to about 11 or 12. I think Proterra.
It's gone. I bet it's gone up. What's it? ACTC.
ACTC.
A lot of the small caps in general, the penny stocks, they absolutely got wrecked. Minus 30%, 40%.
Up 11% today.
What about Argo? Because Argo had an offering on primary bid, didn't it?
Yes, they did.
That held up
and
better than I thought it would, actually.
They closed it within the hour, but they only tweeted and then they had 20 minutes left. So I mean, anyone who uses Trading 212 wasn't able to grab any shares anyway, because I think the only ones that were listed for I were Interactive Investor. So a lot of people.
Is that on the primary?
Yeah.
Is it, or is that just?
Does it work by just you can transfer them over to your broker?
Yeah, they use Crest. So basically, you just reserve them on primary bid. They act as like the payment manager, and then you would have the shares delivered to you via Crest, which is just a share transfer system.
Guys, I know we've just forgot about everybody else because we're just talking right now. Explain primary bid, explain Crest for everybody as well. Just go through it nice and easy. Explain what's happened to Argo.
So Argo have raised cash via primary bid. So primary bid is a way for investors to get a portion of a offering from companies. So when a company wants to raise money via offering new shares, they have a couple of options. They could sell it to an existing investor, or they could sell it to management, or they could try and attract a new investor. On now, you can use a service called Primary Bid, which allows almost like a crowd-funded version of buying shares. And that's what Argo have done. They've looked to raise an amount of money. They've put their shares onto Primary Bid, and they were oversubscribed within 20 minutes. So it's obviously there's quite a lot of demand. Crest is just a delivery system, so all that means is it's the UK delivery system for shares. So that's what pushes your shares from broker to broker.
There were a lot of people.
Argo, a very, very popular stock at the minute. So this is share dilution. So everybody who owns a bit of Argo right now is getting a little bit less of the company.
Yes.
That's something that we should explain. But these share dilutions are usually made to grow something. Take it they're buying something. Are they, Zach?
I believe it's the capital for the Texas infrastructure that they're building at the moment. New machines and even the land as well. But and they said they're also putting money into a company called Pluto, which is a kind of a big cryptocurrency play. So because they've also basically moving into a lot of the blockchain side as well, not just the crypto, but the actual technology, underlying technology. So I mean, even this RNS, it was almost like a point blank kind of initiative. A lot of the investors had no idea about this, and they had a lot of backlash. And then I guess they had to kind of go on YouTube and explain what they were doing. But all seems well now until the next dilution. They're gonna keep doing it. I mean, they've even indicated they're gonna keep doing it. I think a lot of investors just don't understand, that they are gonna.
And one place that's really hard to buy Argo at the minute is Traded 212. Not everyone's favourite platform at the moment. Have you guys got any opinions on Traded 212 right now? I've given my opinion, I think. And I have to talk about this all the time, but Jesus, they are not doing themselves any favours right now.
They're not doing themselves any favours. I saw your video on that during the weekend, and I pretty much agreed with more or less everything you said there. I mean, you pointed out that, look, there's a kind of grey area between what's a fee and what's a commission, and you're right, I think, in thinking that, okay, I don't care whether you call it a fee or a commission. If I have to pay it, I don't really care which one it is, to be honest. If I have to pay 0.15% commission, that's something I have to pay. If I have to pay a 0.15% fee, that's something I have to pay. It doesn't really matter to me. I mean, when I look at it, it kind of just comes down to what's currently getting me the best deal. I had a look at a few places where you can move your ISA to if you like stocks and shares. I didn't see anywhere better than 212 at the moment. I will keep my eye on things and keep looking at them. There are some that I thought that have been getting a bit of attention recently that I think are quite poor, which are places that, as far as I can tell, just buy loads of ETFs that you could buy yourself and charge you to do it, basically. So you kind of pay them a percentage fee or something, and they stick your money into kind of pre-built portfolios, which are just collections of ETFs. And I can't really see why I would do that particularly. There's places that have better and worse execution. You may or may not think that matters. There's places that charge you more and charge you less. All of these things are kind of worth considering, but I mean, I kind of feel the way about this that I feel about the fact that 212 doesn't offer, say, pre-market access. I sort of think if my investing's not good enough to overcome a 0.15%, I think it is, conversion fee, then I just need to get better at investing, not blame the damn broker. In much the same way as if I feel like, well, if I can't make money in market hours, the solution to that is not find somewhere with pre-market access and then try and do it there. The solution is to try and get better at buying stuff when the markets are open. So I kind of feel like a lot of the worry here is, well, I see the point, and I don't think it's good from 212, and I've been infuriated by their comms repeatedly. But I don't think this is going to be something that's going to worry me too much.
Ooh, Steve W. becoming the most popular.
I have a
man in the
feeling
world right
Steve's written a review.
I could be less popular in that I think they deserve a little bit of credit because they could have set that FX rate at anything and you wouldn't have been able to move. If they set that at 0.44, which is a pip lower than free trade, they would have still been the cheapest broker on the market. But they didn't. They went 3 times cheaper than free trade. And that's in the sense that is them.
It's 3 times cheaper. It's 3 times cheaper. But I suppose what everybody would argue against on that one is, when does it become only 2 times cheaper? Or when does it actually become 0.44? How far are they going to go? When does this get? Does this just get worse?
This is pure economics now, because say for example you have a product and you know for a fact it's worth $10 and you're okay paying anything under, and anything, say for example it's $6, that $4 you benefit and you're like, okay, that's fine. And I think it's that same game that Trading 212 is playing. They're playing that game where, okay, if they know that it's 0.44 with free trade, anything under is going to be absolutely fine, even if it's 0.15%. Like, people like me are not complaining because I won't say we, I say I value having access to data and understanding it in seconds. So, because I opened up Interactive Broker and I uninstalled it as soon as I opened it. I was thinking, hang on a minute, I'm going to spend 10 minutes deciding what on earth am I looking at.
Yeah.
Where in Trading 212, I know exactly what I'm looking at. The graphs are there. The information is so easy to understand. You can make trades or whatever, and it's going to benefit so many different people. But, you know, when it comes to like the alternatives, as people are saying, okay, they're going to move to IBKR and other... Like, do you not value your time when it comes to understanding stocks and, you know, information faster?
Opening Interactive Brokers is like opening the past.
Yellow pages.
Yeah, it's absolute. It's disgusting to look at, and that's what I like about Trading 212. I like the fact that it's on my phone. I can access it when I want to. I can use the web app, which is perfectly functional. If I have to pay 0.15% fee for that, that's fine. On the proviso that they do what they say they're going to do. They're going to use this to improve customer service. They said that they wanted to get the answering on live chat down to under 30 seconds. They want to they want to use the rest of it for development. So hey, if they do that, I'll pay a 0.15% fee for that. But now it's game on for the other brokers, isn't it? The other brokers have got an opportunity here. Now Trading 212 was very difficult to equal. It's become somewhat easier to equal.
Yep, now that I've dragged everyone onto thinking that Trading 212 is great and persuaded them all to stick up for it, let me tell you what I really think. I hate 212. I am absolutely livid at the way that 212 moves pretty much day by day from saying, look at this great thing that we're doing, look at how amazing it is, oh, actually, we sort of screwed that up, oh, we need you to pay for something. A good example of this is stuff like ISAs and ISA compliance for a moment, where they said, oh, gee, we made a kind of mistake on the ISA thing. We have all these stocks available, but not all of them can strictly go in an ISA. Here's a list. This is the list. That's definitely the end of the list. And some people like us who were holding some companies that trade OTC or not on the right kind of exchange for HMRC purposes wanted to say, are you sure? We think we might have some stuff that's perhaps going to need to be moved out of an ISA as well. And they said, no, that's definitely it. Oh, hang on, no, wait. Actually, all this other stuff as well also needs to come out too. This kind of stuff drives me insane. They move so quickly from boasting about stuff to having to climb back down on it that this is what I find infuriating. I can live with the idea that you need to charge us an FX fee. I can live with the idea that, look, ISAs are difficult. I can live with the idea that building pies is going to be a gradual process. But they do like marketing it first and kind of fixing it second. And that kind of drives me insane with 212.
That's a very popular sort of development method now, though, isn't it? It's like release early, let them break it, and then fix it. That's essentially how Monzo works.
You're just doing it with our money, though, ain't you? I suppose.
Monzo.
I haven't really noticed
Monzo's
anything
a
bad
bank.
with Monzo.
Stay away from Monzo.
Yeah, I know. I haven't really noticed anything bad
No,
with Monzo,
stay
but I was
away.
probably quite late to Monzo. I know. I find the little pots and stuff are pretty good, and I find the transfers really quick. I've never had a problem with Monzo.
Yes,
at all.
someone was asking how fast it is to withdraw money into your bank account. I don't know if Monzo's helping me here, but it is absolutely super quick. I just do it on Trade 212, and next day it comes into the bank. I don't know.
What, from trading 212 to Monzo?
It's next day.
day.
Next day for me.
Wow, that's pretty good.
Is
I remember
Monzo
it
the
being
company
3 or 4
that the
days.
most of us own?
Yes,
I don't own
investor.
I don't
Three
have
of us
any
do.
Monzo.
I think that's probably about. I mean, something like Legal and General might be similar. That about 3 of us own it, but I guess it might just be because the ones of us that own it can't sell it very easily. But
Yeah, it's very, very hard to sell Monzo. But on Trading 212, so we're thinking that this might be a bit of price discovery, this bit of fee thing. They're going to continue to raise the fees just very little, see how many people leave.
I think so.
It's like sort of turning the tap on and off a little bit, where they just open the tap a little bit and go, oh, that's too much. We're losing too much now. Quick, back it up a little bit.
They've got all the
They're
data.
doing that with their development. They're doing that with the features that they're releasing, and then they're now doing it with the fees. So they've raised it to 0.15% on pretty much any movement you can do in Trading 212 now. If enough people stay, does it just go up to 2%?
I think so. Yeah,
0.2%.
it's basic economics, isn't it?
I'd be interested
And
to
you think
see
you're
that.
kind of happy with that? You think they
I
kinda-
don't personally see that myself. I think they've got a very sort of sustainable model now, so it'd be interesting to see. I'm more interested in them spinning out the invest in ISA side and leaving the CFD side in the dust somewhere. I think that's a better model. I think the CFD side, especially in this bull market, is unnecessary risk for T212. And I think they think it too, considering they've only just opened it back. I think it's been closed nearly since Christmas, hasn't it? And it's they've only just opened up about
But I
100
think
stocks.
in a normal market, CFD must be so good, right? For them, they must make so much money.
That's
in a
what they've
normal
built the
market.
business on.
that's what I find annoying.
Yeah.
I mean, they're really good at firing in notifications at us, trying to get us to do stuff. I mean, in kind of either CFDs or invest accounts or whatever.
Steve W go to town right now on
Steve-
Trading
Steve hates
212.
those.
By the way, I completely agree.
Steve hates
I mean,
those.
they can do stuff when they want, right? They can send us notifications saying Tesla's up, Tesla's down, buy stuff, sell stuff, gold's cratering, everything else is happening. Oh, you can get that bit to work all right, huh? But say it's now taking about 4 months to pay a dividend, some of which are getting paid incorrectly. That sort of bit. Let's worry about that less. Make the people press that button to buy things more often.
Is this the JP Morgan?
Are they as bad as Robinhood for gamification? Do you think are they gamifying trading and investing? Because I personally think they have got a good balance. I personally do think they've got a good balance. But then I can very much see through the notifications that I must have got 2 or 3 notifications today say Tesla's up 15%. Quick, grab it now before this is your last chance. I'm not 100% convinced it's my last chance to. But
I'm also not convinced that was a notification.
I
was going to mention that
Yeah,
notification.
It's different
Then
though,
again,
right?
I
Because it
can't-
becomes almost solicitation when they're charging the fee, doesn't it? And I think that's a little bit dodgy. When the fee comes in, I think those notifications have got to be really, really different. I wouldn't be surprised to see them. Well, they won't go away. Trading 2 wouldn't take them away. They would wait for the regulator to tell them to take them away.
they must work, right? They must.
They
must
are these
work.
the notifications for when stock goes up
Yeah.
a lot?
Yeah.
Yeah, or down.
I think today it was something like Nasdaq's up 3%. I do think they came from the CFD side as well, because it tells you when it comes
have you
from
noticed-
the CFD account or the.
Have you noticed they never do the OTC stuff? This
Uh,
so-and-so stock is up 4,000%. Are you in?
Quick! Get into your FTSE AIM stocks. Will satisfy the trade.
Quick.
Unknown
3 days.
biotech up 4,000%. We've lopped off the
Yeah,
sell.
and if you buy 2 more shares, you'll get an uplist to the Nasdaq by end of the day.
Oh, God. Yeah, I mean that's a big problem. Is a lot of people. I think Prof G calls Robinhood a menace. He calls Facebook a menace, and by the way, Prof G, call him Prof G. Scott Galloway, who has a very good podcast. I think he's on YouTube as well. He's very good. NYU Stern business lecturer or previous. He owns. Is it marketing? He owns his own fund now, I think, as well. And he's a kind of split between very political versus very investing. He's got a very good investing mindset as well. But his political side is that Robinhood is a menace. All of these free trading apps are menaces with the gamification. They're making people harm themselves. I don't see trading 212 that as going that far. I don't see the confetti going everywhere when people get free shares and all that. But I do realise that at some points they've got to try and drag people in and get them to make trades.
Does this mean that trading 212 can't come out with the commission fee trading anymore? The marketing.
Well, it's technically they can because a fee is not a commission. That they will still be able to say it's commission free trading, but they won't be able to say it's fee free trading.
Semantics.
Yeah, it really is semantics.
Yeah, it is. It personally is semantics to me, and I try to keep a level head. It's always tried to keep a level head. I'm very much preparing for the fees to go up a little bit more. I'm trying to set my mindset to that, and I will look at others. I'm not tied to trading 212 in any way. I will look elsewhere, whether it's to start a new ISA. I think they've got me for another year. I think they've got.
There really isn't
ISAs
anything
with them
though.
for next year.
I mean, I think Steve and I have done a bit of a tour of all the trading apps, just trying to get free shares and have a look around them. And
Yellow Pages.
I mean, like Stake is like, it's just awful to look at.
Stake is horrible.
Yeah,
Orca.
it's awful.
Is it?
Have you used Orca?
Yeah, that's awful too.
Oh wow,
I mean,
it's the
so-
worst.
I
I'm
think
not sure
Orca
I'll
is
be
very
allowed-
much a work in progress, but yeah.
Yeah, I'm not
Do you
sure I'll be allowed back to free trade.
Free trade is the easy. I think it still is the easiest to use.
Yeah,
I think
it?
so.
yeah, it's easy to use because there's nothing on it.
Pretty much. But that's the thing, because I don't know. I prioritize trying to understand the data as quick as possible on these apps. I don't want to spend entire day, one stock and just trying to understand. Okay, what's the numbers showing here? What's the because I mean, free trade is very simple. I think there's just one line of the graph, and it's got some simple info. But trading 212, I think with its fee structure now, I think if they obviously upgrade and keep going, I think it's going to be a good thing in the overall.
That's it. I think the bottom line of it is if trading 212 keeps its fee at 0.15 and it starts being better with compliance, better with communication, and starts releasing features like it was last year, and is stable. It feels like a long list that, but none of us will be here next year complaining.
Yeah, I think that's it, isn't it? If it's doing these things, I'm willing to give it a try, as long as we get some good features. I would like to see lending and credit cards and things coming out from trading 212, and even to a point banking. It's not. It's a lot. They're a long way off that.
Lending,
but it's not possible.
Lending money.
Yeah,
for GameStop shares.
I don't think lending. Yeah, I don't think lending. Would be
M1
that far.
Finance, the American broker, already does it, doesn't it? It lends against the balance of your investments.
They lend you money,
and it's also the only one I can't see any legalities against at the moment. I can't see anything, and it's not hard to create yourself as a lender. We've seen all these payday loan things, and there's a lot of.
So what we're saying here is we can use leverage to buy stock.
It's not actually to buy stocks. So in M1 they use it as leverage for like home improvements or something like that. It's all.
In general.
It's basically a proper lender against the balance of your portfolio.
Yeah, it's lending against your assets within your portfolio, so they automatically have the collateral from you. You might be playing a bit of a dangerous game there, and you might want to get a good fee out of it. But it's not bad if all of your money is in Trading 212 or in M1 Finance, then you've actually got quite a. You can actually use that money for a dual purpose. You can use those assets for a dual purpose. You can lend against it if it's necessary. I would probably personally say, from a financial point of view, you shouldn't be doing anything like that. But I know it would make some more money for a investor.
Yes, it makes sense. If you're making 7% a year and they offer you a loan at 3%, it's better than you taking the money out of the market. I know that's a very basic and easy way of describing it, but that's what essentially the idea is.
What about EMC
So could you take your
shareholders?
Tesla shares and then like leverage them to buy an actual Tesla?
Yeah.
Or,
Yeah, basically.
or solar.
I wonder how many people on M1 have actually done that.
I suspect they're probably more leveraging their McDonald's shares to buy a McDonald's, right?
I'll just point out here that we're being very crude about this. This would be a lot more complicated and would not be as simple as we are just explaining right here. There's a lot more to it, but essentially, yeah, that's what M1 Finance is. One of the things that M1 Finance does. I think they've got 3 tiers of accounts, like gold, silver, and bronze, and you can. It allows you a lot of different things. Right, we've gone on a lot there. 1 hour and 5 minutes in, and I'm probably going to have to cut out 1 or 2 jokes that you'll never hear. Yeah, we've talked a lot there about quite a few different topics. I think we've been quite fluid through there as well, and yeah, let us know what you thought about this little Trading 212 chat at the end, because we didn't know this was coming. We've just ended up just chatting about it, really. Thank you very much for making it this far and listening to the podcast today. You can listen to this podcast on Apple, Google, Audible, and the other one, Spotify. And also you can see it on the YouTube channel. And if you have any questions or comments, or want to say anything nice, or say that Steve D's got a lovely chocolate voice or anything like that, leave that comment on the YouTube channel.
Voice?
And once again, thank you very much for listening, and we'll see you next week.
I'm amazed how many people own stocks. I'm amazed how many people own stocks. The sucker's going up.